Awesome. Well, we are actually live. And well, thank you very much, Daren. Welcome to the show. We got here Daren Schwartz from City National Bank. And tell us a little bit about you, Daren.
Good morning. Thanks for having me on your show. I appreciate it. My name's Daren Schwartz. I'm with City National Bank. I've been in the residential lending business on and off for quite a while, I guess about 20 years. With City National Bank now for about 3 years.
Awesome, Darren. And we met because we actually have a deal going on together right now. And when I got your loan pre-approval, I was like blown away with what you guys can offer first-time home buyers. So I reached out to you not just to see verify this guy's pre-approval letter, but because I couldn't believe the pre-approval letter. Right. So tell us a little bit about City National Bank and who you guys are, to tell the audience about how we can also get into these loan programs here.
So I can spew a lot of information if you have any questions. But City National Bank, we're a Florida bank. We're actually the second largest Florida bank. So overall, if you compare us to a Bank of America, Wells Fargo, we're a small bank, but in Florida, we're a large bank. We have about 35 branches within Florida. And again, being a bank, we have a first-time home buyer program. It's actually three programs. We call it, they're the City Smart programs, but it's City Smart, City Smart Workforce, and City Smart Plus. The main difference is they're all first-time home buyer programs, although for the second two, which is City Smart Workforce and City Smart Plus, you do not have to be a first-time home buyer, but it can be the only property you own. So technically, you can be selling your old primary, buying a new primary, and that's what gauges being able to use the program. For the first program called City Smart, you do have to be a first-time home buyer. No ifs, ands, or buts. And the way we define first-time home buyer is not owning anything within the past 3 years.
Okay.
So that's the gist. I can start getting into specific guidelines if you want to hear.
Now, listen, Darren. I think what really got to me is when we were looking at this pre-approval, and I thought that the down payment was the interest rate,
All
right?
right.
That was I was like, no, this must be a typo here. But you guys are offering these with the first-time homebuyer programs, very low interest rates to these first-time homebuyers, which is a huge help for people trying to afford their first home, especially in this high interest rate environment. You guys are offering incentives for seller credits, things like that. uh, Tell us a little bit about that part, and how are you able to offer this? Because I know you explained this to me, and it has something to do with your community lending programs, right? Like you guys are putting this out there purposely to help the community.
Yeah, so the bank has to do a certain amount of what's called CRA lending. CRA is Community Reinvestment Act, and every bank, for that matter, is required to do this type of lending because they have to get points. It's all part of regulation. So, just to give you an idea, the first loan program we have called City Smart, the rate goes out at 4.5% with an APR of roughly 4.65%. It's 3% down, no mortgage insurance. The bank pays $5,000 towards a buyer's closing costs and or down payment. And again, it's 3% down, so 97% financing. There are some income caps on the first particular program. There are no limits as far as the property, with the exception that it cannot be a multi-unit type property. And I'll give you an idea. So the income cannot exceed $68,560 on the first program. So that may not qualify you for much, but in this market, if you don't have much debt, that will qualify you for a purchase price of up to about, it could be $400,000. And again, it's 3% down, no mortgage insurance, for first-time home buyers. So it's
Well,
really,
that's huge because mortgage insurance typically on like the other most popular first-time homebuyer program, which is an FHA loan, or even a Fannie Mae 3% conventional, is still, $150, $200, and it's there for, quite a while on a
yeah,
conventional loan.
most people wouldn't even own the property for as long as the mortgage insurance would be there for. They'd want
Right.
to let and move on. But yeah, you're absolutely right.
Right, so that's a whole lot of purchasing power when you're talking about a rate like this, helping the community. You can't even really make that up with even a little bit lower rate, right, from a conventional program. Not that it's even available.
Yeah, no, like you said, when you first got the letter, a lot of people are like, "This is crazy. We don't believe it. It doesn't exist." Sometimes I have to send like a closing disclosure on another deal over to somebody, whiting out things that are on there that for someone's personal information to show them, yes, it does actually exist. The rate goes out and so forth. Yeah, we close these things day in and day out.
Yeah, it's a great program. Now, there are some particulars of, the home buyer going through a short home buyer education program. Is that correct?
Yeah, there's a 8 hour um, home buyer education program that's required. Typically, people do it on a Saturday. It's Zoom. So you have to turn your computer on. They want you on the camera. You kind of sort of have to pay attention. You can shut your camera off momentarily, walk away, come back. But that is the downside. There is an 8 hour online program for first time home buyers that they want you to go through.
Well, I don't see this much as a downside because if we're talking about 202, let's call it $200 a month for mortgage insurance, right?
Right.
And for the typical person keeping a property 7 years, so that's 200 times 12, that's $2,400 times seven, right? That's a pretty good hourly rate of
Oh yeah,
investment,
that's
time
huge.
invested, right?
And then if you compare the difference in principal and interest between 4.5% and regular market rates, whether it's 6.5 or 7.5%, yeah, no, the savings is huge.
Yes, absolutely. I couldn't believe it. So I could see why people would actually call you and say, "I want to see some proof here," right?
People have actually reached out to my manager before saying, "Hey, we got this pre-qualification letter, but we don't believe it. And what's the deal? How can you offer it?" So yeah, people do start digging into it, not understanding.
Yeah, I think it's wonderful, and like you said, the reason that you're able to do this, right? So that people understand, that this is not a program that's too good to be true, is because you're a community bank. You're supposed to do a certain amount of community benefit lending programs a year, correct?
Every bank, even Bank of America, Wells Fargo, every bank is required to do CRA lending, not just City National Bank. We just have a very good program that's super attractive when all the guidelines are met.
Wow, that's incredible. So, what's your typical home buyer look like here for these programs? What are you seeing? Is there any kind of credit requirements? What are we looking at here to?
Yeah, there's certainly, a couple pages of guidelines, nothing crazy, nothing crazier than FHA or regular conventional. A buyer has to have, as far as credit goes, at least a 620 credit score, which is pretty low, even lower than FHA requirements typically. We do require 3 trade lines of credit. Probably the main point as far as credit goes is we don't want to see any late payments for the past 1 year.
Okay.
It's okay if they had a late payment 13 months ago, but within the past 12 months, 0 late payments on the credit.
Okay.
If there was only one trade line on credit, then we can do alternative credit references, such as a verification of rent for 12 months. I have a borrower that happened to really deep down had to figure out some other credit references, and they happen to have a subscription to SeaWorld where they pay a monthly cost and they can go to SeaWorld as frequently as they want. So we got a verification from SeaWorld as an alternative credit reference. So we call the shots on what we need to get, but it is having to get 3 credit references, whether they're trade line references or alternative.
That's incredible. So you guys are actually out there trying to help these first time home buyers get into properties. So the multifamily won't work. So a duplex, triplex, fourplex is not eligible for this type of property.
That's correct. It's basically condos, townhomes, single family.
Okay. So with condos, are we able to, is there any kind of qualifications? Because as you know, FHA, there's like 3 condo buildings in all of Florida that qualify.
When you're doing a condo, I almost don't even try to do FHA. But so the interesting things about condos, a lot of guidelines, a lot of things changing since the Surfside, devastation and so forth. That was awful. But we are basically able to call the shots on condos. In South Florida, typically, not Central Florida, there's the 40-year certification, which is huge. But in Central Florida, you'll have a condo and maybe you don't have the reserve requirement, which is proper. That's got to be Fannie Mae, FHA, very diligent. If there's no reserve, they can't do it. If there's less than the required reserves, we can call the shot on the condo. If there's litigation going on because of maybe one owner suing the developer or suing whoever because of like a slip or fall, we can make exceptions. So we have a condo department specifically that we do require the condo questionnaire. If it's not an approved condo with us, we require the budget, but we can make the calls on what's going on. If there's something wrong with the condo, we can basically, unless it's something crazy, we can usually loan on that condo.
So that's huge, because especially with somebody with a tight budget might want to purchase into condo buildings, and that really helps. That type of program helps. Now, you did say moving on to the programs without an income cap. How do those differ?
So the main item. So I'll just go over. City Smart has an income limit of $68,560, and that's for the counties in Central Florida. The program works for 7 counties overall, but the 4 counties in your area, Central Florida, are basically Orange County, Osceola County, Lake, and Seminole County. Fantastic. So those are the only 7 counties that we work this program in.
And how about in South Florida? Because we do have audiences.
Dade, Broward, Palm Beach counties.
Oh, wonderful. The biggest 3 counties in.
Biggest 3, but some people are like, they're in Brevard County. Oh, no, I'm like, sorry, it just doesn't work there. It's the 7 counties. It may change going down the road, but just 7 counties for now. So again, back to the income. So basically $68,500 is the income limit for the City Smart program. Then the next program, which is the City Smart Workforce, which also goes up in rates. That goes from a 4.5% rate to 5 7/8, still 3% down, still no mortgage insurance. The bank still pays $5,000 towards closing costs or down payment. That goes up to basically $120,000. So it typically covers most buyers, and that's where it doesn't have to be a first-time home buyer, but it's got to be for a property that is going to be their only property. So maybe somebody selling their condo that's now buying a single family, as long as there's no other property owned. It can be owned within the past 3 years, but just not at time of closing. They have to sell that.
Okay.
I mean, the good news about this program too, yes, it's a higher rate. They are not required to do that 8-hour course though, because they've already been a home buyer. So at least they don't have to do the first-time home buyer course.
But it's still lower than what we're getting on a Fannie Mae conventional loan right now.
Significantly. And again, the no mortgage insurance is the cure-all, which if people say, oh, Fannie Mae rate's only a little bit above that, or FHA rate's a little bit above that, with no mortgage insurance,
No mortgage insurance, $5,000 back.
Yep.
And then, are we able to add to that seller concessions?
Yeah, believe it or not, up to a 6% seller closing cost concession, as long as it does not exceed closing costs and prepaids.
Okay, so I could come in with just 3% of my own money and everything else being paid for by either my lender or the seller.
Yeah, and of that 3%, we require the borrower on any of the programs to have 1% of their own funds. The other 2% can be a gift, from a family member.
Wow. Wow. So listen up, any moms out there, dads out there that want their kids out of the house, call me. I'll hook you up. It'll cost you 2% to get them out of the house.
Right there, exactly. Be the best gift they ever gave their child.
And the reason I felt so, like passionate about this program when I heard about it is because I've been working with first-time home buyer. I've been doing first-time home buyer events and workshops and trying to promote home ownership because I really do believe in it. Right? I've played the property ladder game for years. And, I believe that people should, it might not be the best investment for most people, right? For some people, it might not be the best investment, but for most people, it's the best investment because it forces them to save money. It forces them to pay down a debt, which ordinarily they would probably find other things to spend their money on, right? And then there's a lot of tax benefits there. You can take your equity from one property to another tax free, so there's a lot of different things. And with a program like yours, I could start off in one program, right? Build up some equity, sell this home, go move into another home, use your other City Advantage Plus program and the workforce program, put 3% down of that equity that I just built up, and continue to do this over a few years. You could build up a substantial nest egg, right? And where people say buy real estate and wait, right? But nobody should be waiting to buy real estate.
Right.
Right.
I'm sorry to interrupt, but what other people don't realize too is some people are like, I'm just going to continue renting and so forth. But let's just say you found something for $300,000 to buy, right? If you were to rent that same property, let's just say it rents for, throwing out a number, $2,500 a month. Someone's got to come up with first, last security. That's $7,500. If they were to use our program and they get the seller credits and they get our closing cost credit or down payment credit, 3% of 300,000 is $9,000. So for an additional $1,500, you're getting into owning something. To me, it's huge. It's huge. And there's a real sense of relief, not relief, whatever the right word is, for getting a borrower into a program at time of closing once they sign everything. And they're just like looking and going, wow, I got into this house for, even if it's $10,000, I own this property. I'm no longer a renter. I'm no longer living at home. People are super, super impressed with it. And, going through the process, it's painful, like any mortgage. It's document intensive. You have to do that course and so forth. But it's a real sense of, it's just a good feeling helping somebody get into it, especially when you see how happy they are once they get into it.
100%. I think, and then this doesn't have anything to do with your hometown hero programs or anything like that. This is a independent program through the City National Bank. It's not dependent on, will the funds run out, right?
I do hometown hero loans, and I constantly get the email, we're out of funds. If you don't have your money reserved, you'll have to wait till next time or until some loans are paid off. No, this is purely City National Bank's program. We don't wholesale it out. Other brokers have called me and said, hey, I want to put this loan through you guys. What do you pay on the back end? We don't. We can't. It's just our own loan program. And I'm like, listen, I would love to help your borrower, but you'd have to basically, relinquish everything. Sometimes they do it, but sometimes they, want to make a fee and try to figure out how to get it done. But yeah, it's City National Bank's own lending program.
I think it's great. Sometimes, you got to do what's best for your client, right? Yep. And sometimes letting it go is the best thing for your client, and telling them where you could find the program. And that's exactly why I wanted to bring you in here, to share this with the community. It's important right now with home prices the way they are and the affordability at an all-time low. This is really helping the community. So kudos to you guys. It's a great program. Daren, is there any kind of restrictions other than income area?
The only other restrictions there are loan amount restrictions. So for instance, on City Smart, the loan amount's $450,000. If someone, let's just say they were buying a property and it was $500,000, but they did have $50,000 to put down, so their down payment would be $50,000 as opposed to 3%. They would still be able to qualify. The loan limits on the other two programs are $600. So again, because they require higher income limits, they'll qualify for closer to $600. And really, the only other limit is in the City Smart loan program. It can be any type of property, meaning any income census tract. Whereas on the other two, Workforce and Plus, the property does need to be in what's called a low or moderate income census tract. Okay. People think they're like, oh, wow, this is going to be a dump or it's going to be in a crappy neighborhood. And no, quite to the contrary. You can have $500,000 house, $600,000, even $700,000 house that the county just deemed low or moderate, just because no rhyme or reason. That's just the way it is. And maybe the house across the street might be upper or middle income census tract. Again, no rhyme or reason. We have maps that we can share that where there are more properties that are in the low or moderate income range. I have a lot of borrowers that reach out to me, especially in Central Florida, and be like, hey, I'm looking to buy this house. And first thing I do is look up the income census tract, because that's what I'm trained to do to see if it meets the program. And I'm like, hey, we have this program, but the property's got to be low or moderate because of where your income falls. So I look it up and it's not. And 90% of the time, the borrower will bag that property that they're looking to buy and look only for low or moderate income census tracts just to use the program. It's that powerful of a program where people are like, hey, you know what? I don't really need that property that's right there, and I can find something 2 blocks away that works.
Yeah, 100%. I mean, you're saving money. You're keeping this property at a low interest rate, low down payment, and you can always keep the property. Yep. Right, like after you've lived there for a year or two, and you've outgrown it or whatever.
Yeah, no, you can then go and buy another property, rent that out, and use an FHA loan, use a conventional loan. If you're selling it, use one of our loans. 100%. There's no payment penalty. There's no grant, nothing like that has to be paid back except for the regular mortgage. Just like any mortgage, you pay back the principal balance.
That's a great point. I'm glad you brought that up, because it's not a grant. It's not a second mortgage loan, a forgivable loan, a ship loan, any of this type of stuff. So when we are putting some of these first-time home buyer programs together, some of these grants have clauses in them that if you do sell within a first 3 to 5 years or whatever their clauses are, you have to repay that. Right.
Yeah, nothing against like Hometown Hero program, which is actually called now Live Local, because it can be any first-time home buyer, and they didn't want to just designate it. You have to be a Hometown Hero. You can be any first-time home buyer, as long as your company is a brick and mortar in Florida. Those are the guidelines for that. But if you were to do that kind of program, when you go to sell that property, even though you don't have to make payments on that silent second that they call it, it's due in full at the time of closing. We just have your first mortgage, and if you paid it down, you just owe the balance, principal balance on the first mortgage.
Amazing, amazing. I'm glad we were able to touch on that. Uh, this is different than those Live Local or Hometown Heroes, any of those programs, and that's a big key. Some people don't realize that those grants have to be paid back at the end. I know that there's a certain forgiveness period or so, but with some of these programs, but this is just a great program overall. no
Yeah,
no strings attached, nothing.
yeah, that's why I say, okay, the downside is an 8-hour course, because there's not a lot of other downside.
Listen,
That's okay. Someone's got to spend 8 hours of their life on a Saturday in front of the computer. You know what? Most people spend that much time on their phone in any given day. So it's not.
you could watch this while you watch a whole series on Netflix, right?
Yep.
You can have you can have the computer on one lap and Netflix playing on the other side, and
Totally.
make it a Saturday, and you're really going to reap the benefits from this.
For sure.
I think it's great. I can't promote it enough. I was super excited. I can't wait to get this program into more of these home buyers hands. It's an underserved community. A lot of real estate agents do not even want to work with first-time home buyers because of this affordability factor. And I think what you guys are doing needs to get out to the community, and it needs to be screamed from the rooftops.
Yeah, it's a lot of people. I'd say the majority of the people do not even know about it. When I send out the guidelines, they're like, "How long have you had this program? Is it new?" We've had it for a long time. The bank's been around for 75 years. We haven't had the program for 75 years, but for a long time.
Yeah, wonderful.
It's not going anywhere. The guidelines do change, but it's not going anywhere. The bank has to do it.
Yeah, that's great. That's great. Let's force these banks to tell people about it.
Yeah,
right?
no doubt.
I think what the problem is the lack of communication. So, it's our mission in 2024 to get more first-time home buyers to take advantage of City National Bank and take their free money.
Exactly.
So, Daren, it was a pleasure bringing you on board. If there's any parting words you want to tell the audience, the floor is yours, my man.
Yeah, no, I mean, it's like I said, it's a great program. I'm available anytime, 24/7. People call me on my cell phone. Even like the income census tract, we have it in our guidelines how to check it, but people are like, you know what, I'm not sure. Can you look? So I'm constantly getting text. Hey, I'm looking at this property. Can you check it? Takes me 2 seconds. I'm like, yep, it's moderate. Yeah, it's low. Oh, no, it's middle. And just letting people know it works. Again, I'm available anytime, 24/7.
But it's a very simple website. We could link it down below here, and you could just put in the address right there. Make sure it falls in that. But that's only for the worker plus, right?
That's for the workforce and the plus, where it has to be lower moderate.
Right.
City Smart itself, no, it can be any income census tract.
So if you make under $68,000 in this area here, and how can you tell? Because I imagine South Florida income level is a little bit higher, affordability is a little bit higher.
So it's interesting. Dade County, the income is actually lower than it is for Orange County. You would think it'd be to the contrary. Broward's a little higher than Orange County, and Palm Beach is higher, but Dade County is lower. It's kind of the counties designate what this 80% of AMI income is, and that's where the numbers come from. We don't designate that. That's per county. But I mean, Central Florida is 60. I'll give you the numbers just and leave you with this. Dade County at 59,760 is the low number for City Smart. Broward is 70,800. Palm Beach is 78,640. And then you have Orange County, Osceola, Lake, and Seminole, which is 68,560. So again, Dade being lower, we do the fewest of these City Smart in Dade. The majority that I'm doing happens to be in Central Florida.
Now, is this household income, by the way, Daren?
It's household income. So
it's household income.
It is household income. Yeah. So you can have a husband and wife, and let's just say the wife collects disability. Right. And the husband has a job. So the wife may not be qualifying, but we still need to use her income in the household income. Good point. I'm glad you brought that up. Yes.
Okay. So if I only make $50,000, right? But my wife makes, 75, 80, household income is above the limit, so we wouldn't qualify for the City Smart.
Correct. We'd have to go into one of the other programs.
Okay.
Absolutely.
All
And
right.
all we do with that is we have a form. I think I have it right here. It's funny. It's this form we get filled out, which says Fannie Mae, but it's not a Fannie Mae loan. It's our own loan. But this is how we determine, is there someone else in a household? Did we verify it? What did they make? That type of thing. Yep.
Wonderful, Daren. Well, thank you so much for coming on the show. It was
Oh, it's my
great
pleasure.
getting
For
some
having
value. We're definitely going to do some more business together. I think it's great to get this out in the hands of more buyers. Thank you so much, Daren. I appreciate what you guys doing there, and let's do some more.
Sounds good. Thank you for having me.
Excellent.
Appreciate it. Have a great
Thank
day.
you, Daren. You